2-to-1 declining to advancing stocks. Tariff and trade still the marginal mover of the market, but pretty modestly. Again, very narrow trading range. This has been going on for a while now. Take a look at the sectors and consumer staples, defensive group leading. The only reason consumer discretionary is up is because Target and Lowe's is pushing them all higher. Most of the stocks here are down. Utilities, flattish. Semis predictably down. There's trade. Banks, keep an eye on the banks here. We've been straight down on yields for a couple of weeks now. So what were we, 196? On the 10-year a couple weeks ago, we're 176, 175 today. So keep an eye on that one. That might bear watching. Retail, you talked about what was going on here. Of course, we've got Target and Lowe's, great numbers from them. TJX had decent numbers as well, but flat. Home Depot, disappointing numbers yesterday, but really rather modest response overall. What these have in common, two things. Number one, they're all winners. Target's up, what, 80%? That is not a typo. This year, we're looking at that. That's a new high. Lowe's has been huge this year. That's up 29%, I believe. TJX has been big. That's up 35%. These are the winners in retail, all here. Home Depot also, even despite that 5% drop yesterday, 30% to the upside. So this is what they have in common. They're all winners. The second thing they have in common is basically when they were asked, if they had the opportunity, the consumer is really strong. Brian Cornell, we've been playing this. Becky's interview with Brian noted here, we continue to see very healthy consumer environment, strong labor environment. All the indicators say this is going to be a solid holiday season. Nonetheless, the stock market, a lot of complacency, sort of grinding higher on not a lot of news. Very narrow range in the last couple of weeks, very low volatility. There is seasonal strength. We get these upticks day after day, and more money kind of comes in, that FOMO we keep talking about. No reason for anybody to get panicky or concerned, but it is a little bit complacent right now, and I think that people are talking about that. As for the tariffs, you can't help but feel that the talks are stalled somehow. So there's sort of three choices the market keeps talking about. Number one is an actual situation where you get a real deal, a phase one deal. No new tariffs and existing tariffs are rolled back. The question is, what kind of concessions would the president get for that? That seems to be stalled out a little bit. That's a problem right now. Then there's what everybody down here calls phase one light, where there's you get essentially where you're removing one kind of tariff. There's no new tariffs coming on in exchange for some kind of buying of agricultural products. Phase one light, and then you get no phase one deal at all, and you do have tariffs come on December 15th. So there's three choices here. We just can't figure out what the probabilities of them happening are. If you want to know what's going to move the market in the next couple of days, I think it's going to be the manufacturing numbers that are going to come out overall. Here's, by the way, is Brian Cornell's number, quote we saw earlier. We continue to see a very healthy consumer environment, strong labor environment. All the indicators right now say this is going to be a very strong holiday season. PMIs are going to be out on Friday. That's the next potential market mover. Remember, there's a belief that somehow the global economy is starting to bottom. No recession talk, but keep an eye on what's going to happen. The S&P near new highs right now. We're going to get PMIs for the United States. We're going to get PMIs for the Eurozone. So France and Germany will be getting manufacturing PMIs. We've had a nice move up there. They're just off the highs. Japan also PMIs on Friday. So remember, this idea, lower global growth, but still solid. We'll test that on Friday.